With that backdrop, let's invite Mahesh Patil, the Co-Chief Investment Officer, Aditya Birla, Sun Life, AMC. Good morning, Mahesh.
Morning.
Thank you very much for joining us. Well, I mean, I know this is a stock-specific issue, but UTI has side-pocketed Boda. You will see all mutual funds doing that?
So I think each one has taken a different view on that. We saw earlier, Templeton had that earlier. So it depends on what's the view you take on the company in terms of, obviously everybody has marked it down significantly. Okay, exposure in the books are much lower than what the face value would be. So again, I think the situation is pretty fluid. I think we'll have to see, okay, what happens, right? The companies have, I think the rating agencies have downgraded. So to that extent, anyways, one needs to mark down the paper. And yeah, I think side pocket is an optional thing. Okay, it's not mandatory. And depending on what exposure individual fund houses have, okay, in what kind of schemes, I think one would take a call on that.
Okay, 80 points down now on the Nifty. Now the 12,000 mark is gone. 11,969 now on the Nifty, and the Bank Nifty 30,500 is gone now. 30,495 thereabouts. So there's selling pressure which is visible. Mid caps also under a lot of selling pressure. Mahesh, good morning. So, you know, we had a very nice January for broader market. It looked like, you know, things are looking up once again. Portfolio started to do well. NAVs were again moving up. February hasn't been that kind. I mean, the first week was, but ever since 7th February, we've seen a sharp decline in mid caps and small caps. What do you think has gone wrong? And comparisons being drawn to last year when we had good January and then a big decline. Do you think those are fair comparisons?
So you're right, actually. In fact, our view also at the beginning of the year was this year, I think you should see, the global, there has been a risk on, and huge amount of liquidity globally would keep the markets pretty elevated. And the cyclical bottom, what we saw in the economy, we thought it's behind us. And that would pave way for slightly broadening of the market. And again, with liquidity starting to flow in, both domestic as well as global liquidity, you will see the breadth of the market start to improve. And that's what we saw at the in Jan. The breadth improved, the mid cap and small cap also give a reasonably good bounce back. And the view was it should continue to do that. But I think what happened was the outbreak of coronavirus globally has actually put some brakes to the global risk on trade, and we have seen as a result of that some amount of correction in the global markets, and also some concerns about the global growth. So this year the global growth was expected to actually move up on the back of good liquidity globally. So there clearly there will be now downgrades, and there is some kind of an impact, short-term impact, because of the coronavirus in terms of production, in terms of few sectors will get impacted. And that has, I think, led to some weakness in the market. And on the domestic side, I won't say there are any major concerns. I think recently some issues which have come up on the banking side, that has put some pressure, and market is still waiting to see how things pan out. And the budget was a slight letdown. It would have hoped to give some stimulus to the domestic growth, which would have actually kept the momentum good, and also led to a lot of other sectors participating in this market rally.
All right. Well, for now, you know, as you pointed out, the Bank Nifty is under quite a bit of pressure. I just want to point out that IndusInd Bank has hit a fresh 52-week low this morning. It's down almost 25% for the year now, and under a lot of pressure. In fact, talking about 52-week lows, Bank of Baroda, PNB, BHEL are all at fresh 52-week lows today.
So I was going to say the exact opposite. At 11,970 and at 30,500, both the indices have found support. And I'm sure it's only 5 minutes that the market has traded, but just a point that, you know, at that point there seems to be some bit of short covering.
Okay, well, you know, I wanted to come back to this discussion on banks. There's something that's spooking some of these larger banks like IndusInd Bank. What do you think it is? And for investors who've been holding on to these names for a long time, has the time come to churn out, or are you keeping the faith?
So I think some of the banks we've seen on the corporate NPAs, while the large corporate NPAs what we saw in the earlier cycle around 1 or 2 years back in the metal space, in the infra space, those are behind us. But there is some amount of stress which has emerged in recent times in the mid corporate side. It could be on the real estate sector, okay, which is seeing some amount of pressure, and more recently on the telecom side. And as a result of that, companies which had exposure to some of these names, we are seeing some pressure because the expectation of reduction in the credit cost, which was anticipated around 6 months back, I think that number will probably take some more time in some of these names. And in some cases, wherever there has been a management change, where we've seen one management which has been there for a long time, markets are a bit nervous in terms of how the transition would happen. And that could be one of the reasons in a few banks, where we are seeing the pressure because of that. But I think there is some amount of increase in the stress which we are seeing, especially on the SME, mid-corporate, on the real estate side. And banks which have got exposure, or NBFCs, I think are seeing pressure at this point in time.
Okay,
Yes,
I just want to
3%
pull
down
up
on IndusInd Bank. Just one way decline which the stock has seen. In fact, if you see the chart of that stock, but
just a minute. I mean, I just want to point out to the intraday charts of all the Asian markets. If we can just pull it up, there seems to be some stoppage of the falling. I mean, if you pull up the intraday of Hong Kong, Hang Seng, that is, of Nikkei, of Kospi, I'm not saying that we saw a rapid fall, and then in the last, say, half an hour, we have seen some bit of stability.
Yes, and I think a couple of stocks are beginning to see some interesting moves. I think one of them is Ashok Leyland. Just pull out that stock. Now, the conference call was yesterday, and I think the notes out after that were quite bullish on, the fact that there was a lot of inventory cleanup, and that's why the numbers were weak. But a lot of most of the brokerages are expecting recovery this year. In fact, most have raised price target on Ashok Leyland, so that's an interesting stock. That's beginning to make a move, so I'll keep an eye on that one. Mahanagar Gas is the other one, which is right now moving to high point of the day. So some of the stocks are making a bit of a move. In fact, the entire gas spectrum, Petronet, LNG, that's making a move. Mahesh, auto stocks, I spoke about Ashok Leyland, that's looking interesting right now, but your thoughts on whether this space has seen the worst in terms of price damage?
Yeah, I think to a large extent I would say that, but I would still be cautious in terms of the recovery on this sector, right? It's still not visible. We have to still see the transition to BS6, especially for two-wheelers, where it can be slightly disruptive because the cost increases are much higher. So one has to see in the first quarter of this next fiscal year how the growth momentum catches up. Again, in commercial vehicles also, while things are bottomed out in terms of a recovery, I think unless the domestic economy, we see a significant uptick over there, it's difficult to take a call. It might take another 6 to 9 months before we see any meaningful recovery over there. So I think it's things are bottomed out, but I think the recovery is very slow and gradual. And I think one has to wait and see how the next quarter, especially how the rural thing picks up, because there's a lot of hope on that the rural economy will pick up, because this year the rural economy post the monsoon, the increase in the farm prices, we have seen the food prices have gone up. There is some expectation that there will be much more money at the hand of the rural farmer, and that could help to pick up demand, at least for vehicles.
But overall for the market, I mean, it's selling off some more right now. So the Nifty is almost getting to an 80-point cut. It is at the lowest point of trade. Bank Nifty down about 200 points. I didn't get your view on how you should approach the markets over the next 6 months. Because of all the caution, has the time come to raise cash levels, or do you think that this is still a buy on dips market and one should continue to invest?
I think looking at the overall liquidity situation, I think markets to a large extent are also driven by liquidity, and there is enough amount of liquidity globally. So we'll continue to see good flows globally. Domestic also, after the recent move by the RBI, there is going to be enough liquidity. So we don't see any major concern. I think we have come out from a cyclical bottom. We have seen the worst in terms of the earnings. There could be small hiccups here and there because of how the coronavirus globally pans out. On domestic, some issues on the banking side. But clearly, I think the broader trend of the market looks up. Our view on the market has been this year that there will be modest gain in the markets. Don't expect large gains, at least for the Nifty, because the Nifty has moved out. The fundamentals will slowly catch up with the market. And any correction in the market, I think, would be a good opportunity to for investors to dip into that. And I think once even globally, our view is that once we come out of this in the next couple of months, the slowdown because of coronavirus, I think there could be a sharp recovery back. And that could again mean that the sentiments globally could be favorable. And I think inflows both from foreign investors into the emerging market, this outlook looks fairly good. So I think this is the time for investors to stay put on, be cautious at this point in time. Don't expect very large returns, but definitely any market correction should be a used opportunity to really add more to equities. And I think you should expect slightly the breadth of the market should start to improve.
That was not going to be my question.
I think we have seen that.
These narrow 10 faithfuls or the left behinds.
Yeah, so I think the larger companies, the growth stocks, the quality stocks will continue to hold on and do well. But I think as we move forward and as the domestic economy gains traction, if you see that, then clearly I think you will see money moving down, at least in the tier 2 names, not in the tier 3 names, but good quality tier 2 names. I think that breadth will start to improve, I think.
We are seeing the first signs of consolidation in the old smokestacks stocks.
Yeah.
JSW Energy has bought a bit of GMR, Kamalanga. Then JSW Steel is now well and proper with Bhushan Power, and it's also bought a few Odisha mines.
Right.
Are you interested now in steel and power? Power has not done much, but how long can you neglect that sector?
So I think, steel looks slightly okay at this point in time. I mean, there could be a near-term pressure because of China and production cuts and demand will slow down over there. But if I take a medium-term outlook on steel and the outlook on China, where the production capacities are not likely to increase, I think one can at least take a positive outlook on steel from a medium to long-term perspective. So, but otherwise on the other metals, we are not so positive on the metal space.
Okay, well, Mahesh, we'll leave it at that. Thank you so much for joining us and giving us your thoughts. And in fact, we'll take a cue from the last statement that you made on metals and on JSW Energy particularly, because the company is in the news. They've acquired 100% shares in GMR's Kamalanga Energy.